in the market. The coronavirus kind of fears are spreading around. You can see TVIX here is popping a little bit. So we are getting an increase in volatility again. Now, we did have like kind of a nice normal pullback on the TVIX. So, we probably are due for a little bit of a bounce on this thing. Markets don't just bottom out they don't bottom out when you have like these kind of news, like in just like one swoop, most of the time. There's usually like an ebb and flow that goes to it. We had like a nice bounce the last few days, last couple days on the QQQs. And so now we're starting to pull back. And that's natural. Like you often, markets don't always bounce like in a V fashion. Sometimes they pop up, they got to make a higher low, and then they go. I wouldn't be surprised to see the market ramp back today. But the easy play is over. The first few times you get like a big gap down, the first time you get that big gap down, like it's easy to play, the long side and the bounce, especially if you're coming down and you're kind of in that big trend. As you have subsequent more gap downs, every time you do that, it gets a little bit more tricky and a little bit harder to just keep doing the same play. Like, for example, the last, two times, this LK gapped down, right? We shredded it, like, right at the open for, like, 2-3 points. And we did that, like, we've done that a couple times where, it gaps down and then we take, like, the easy shred on it. Now, like, that type of play, like, now it's gapping down again. It's going to be a little bit more tricky because we've already used that play multiple times. So today, what we're going to have to do, wait out the first few minutes, see which way we start to turn. If you see like a lot of the names that we like to trade, now they're getting stuck back inside a range. That makes it infinitely, the first bounce is always the easiest, but now the second and third ones, they get a little bit more tricky. So we'll have to just be mindful of that. I didn't see like that many hot earnings plays today, but there are definitely enough. Let's go over some of these. So there's a couple things that are going on. Number one, all these little vaccine stocks are popping up again. These have been actually really easy traders. Like we got some nice fades on this already. Man, if I could get a gift and get this thing jammed back up, I'd hate trading small caps, but I will, short these kind of things because they're a little bit more liquid. Like this one moves actually really easy and it's a little bit thicker. If I can get this thing jammed up over 5, like I'll look to reload this thing on the short side. I had a really nice trade on this a couple days ago. I faded all day, which I did not participate in, but I got a good chunk of the move. I think that something like this we definitely want to play again if it spikes. All right, if it spikes, I think that one's looking pretty good. Tesla, yeah, I'm not sure if today Tesla's like a fade the news event or not. Clay, typically the exhaustion gap days, they are a little bit more tricky because an exhaustion gap is usually just like, it's like the last gasp on a stock, but it's not necessarily like if it's got fresh earnings out. Fresh earnings could be the start of a new move actually. But when you do get a stock that's been running in anticipation that is really overbought, it's very well could. I do think this is going to be a tricky trader, though. Tesla, the range has gotten so wide, Clay, in terms of like just how it moves intraday, that it's become like hard to corral. You have to trade it really small, but it does too much volume. It does so much volume, and now it's so expensive that the range is just, it was a little bit easier to trade when a couple $100 ago. Now the size of the candles, the intraday range is just getting, $30, $40. It gets a little bit crazy, but I do got it on my watch list. I'll have to see which way it shakes out at the open. The one thing, Clay, is like if you were really going to short it, it would have been better to short it in the pre-market back into this resistance when it faded off at this dotted line than try to kind of chase it down like $30. So you have to see which way it opens. Hey, Rick, how you doing, brother? It's definitely on the watch, though. Tesla is known to oftentimes gap up, it'll pull back to support, and then it'll re-ramp again. So if you look, like Tesla does this gap fill setup all the time. Like see yesterday, like it had a gap up, it spiked up $10, and then it faded off, and it faded off the gap and just filled almost, to the dollar, and then it started to ramp back, into the close. So watch for like some kind of pullback. If it starts to hold at the 9 EMA, if it starts to hold at the 20 EMA at the open, that's gonna be a good solid play. We'll have to see which way it shakes up. I just don't know. It surprises us a lot. This key RVO is a nice play. You've got a 120 breakout here. It's pushing to all-time highs. You're in a really sweet spot in terms of sector. Semiconductors have been a really good sector for the last year and some change. This one seems to move pretty well on earnings days, and then after that, it usually just kind of sits around. But you see the last earnings, you had a gap. It opened at 91. It got to 97, so it had a 6-day intraday range. The last time it had earnings out, that's what we want to see. When you look at an earnings play, like always kind of see like, okay, when was the last time it gapped? How did it react? Did it move clean? Did it have intraday range? And if it does, so you had 2 days of kind of good solid movement, then that's a stock that we want to, be watching. So I got this one on watch too. Now is another tech stock that's breaking out to all-time highs. Stocks that break out to all-time highs, these are the ones that get the flavor, all right? When you get a clean breakout, like if you're looking at stocks and you want something clean, when you get something like this, like that's when you're going to be really, that's when you can cook, cook and cook. I like this one, 304. The float on this is only 92 million, so it should be able to ORB. If you get an ORB on this one, watch this. So what is the ORB? What do we need to see for ORB? For ORB pattern. So you got the gap up on earnings, right? So you need fresh news, gap up 3% or more. Right? That's what we see over here, right? 3% or more. We need to see gaps up. Hey, welcome Gregory, by the way. All right? 3 candles in range at the open. So I want to see 3 sideways candles. So pop up, 1 candle, 2 candle, 3 candle, sideways once the market opens. 5 break of range, stop loss under the base or VWAP, whichever is closer. Now you're ready to shred, okay? Ideally, if the stock has under 100 million share float, then you're going to be able to have yourself a really nice nice movement on it. We'll keep an eye. 303. You know what? If it starts to pull back to like the 9 or 20 EMA, that'll work out too. Good. You know what? 9 EMA pullbacks work really well on these kind of stocks. They always do. So what I mean by a moving average pullback, right? This is like kind of what you want to see. See like Squarespace yesterday? 74 to 77. So you get the like opening spike and then you pull back. So you have like a sharp pullback. A lot of times people want to chase it up here. You get that sharp pullback to the 9 EMA or 20 EMA and then you start to hold. Once you get a green candle to hold, then you can long it with the stop loss under and then you're ready to go. So just like that's like the simple pullback that you want to see in sometimes these earnings days. LXRX is another one that's got a 3-tap break. And these are getting a little bit pricey. I haven't traded this one, LXRX, in years, so I'm not that keen on it. But I have seen in the past, like if you look at the last time this thing had news out, it doesn't. Let me get rid of all these lines here. Hold on here. Some of these charts I have them up for years. If you look at the last time it had news out, it was rolling at 232. It opened at 252. It got to 266, and then in a few days it got to 281. So it definitely has like that kind of. It's got the ability to make that kind of move. So I think that's actually pretty cool on this. You're gonna get yourself some nice little shredders on this one. What do you think? Yeah. NVAX is another one that's this one's going to be gapping up today, but it's been fading off. All the strength on this has been fading off. You've got to really be mindful. Like when you see something like this, man, you can come in and like all these kind of pops now towards 10, any kind of big push, I think they get faded off. So we want to be able to just short these piggies. APT too. Any kind of push. We need one big push, though. You don't want to just short it on like a little gap. If you start to get a big push and get this thing into 7/8, That's going to give us like a really nice, that's going to give us a really nice little area over there. Good, good, good. Let me see. Hey, Danny, how you doing? TSCO? Yeah, you can add this to the watch list. You know what? I didn't see that, but TSCL, CCL, those could be potentials. When you get a gap down play like this on bad earnings, so you can see here fourth quarter sales, miss market expectations. Earning surprises are one of the keys to, all big movements. So if you ever read like the Encyclopedia of Chart Patterns, anybody read that by what's his name? It sounds like Bukaki, but it's like Bulkowski or whatever. It's pretty good. The number one pattern he has listed on that website and that book. The book has like over 1,000 trading patterns. You just put them all in a database. The number one is earning surprises, for the upside and downside. You can see this one misses earnings, so that's obviously a surprise. Then you got a chart breakdown here. So when you get a chart breakdown, this is right for an ORB type of play. So what do you need for ORB? You gap down 3 sideways candles and you can go minimum. It could be 4, it could be 5. You need minimum 3. That one works. CCL could work too, man. Anybody ever been at Carnival Cruise Line? Every time you go to Carnival Cruise Line, you know what happens? You wish you were on one of those like nice royal siesta ones, right? Where all the rich people go. But we're Indian. When we go on cruise, we always go on Carnival. But it smells, the food stinks, but you really get nice group deals. But you always wonder how the other side lives. The ones that are on that Royal Caribbean, Royal Siesta, magical cruise lines. Carnival Cruise Line's not magical. And you see a lot of Indian people. You see all my people. You see all my people on them. Oh yeah, the Desai family does them all the time. But we're cheap, and we love buffets. You ever see an Indian person at a buffet? They're so skinny, so hairy, but you put them at a buffet, man, they're putting some of that food in their purse. They put it right in their purse. My mom used to do that all the time. You go to a movie theater, bring 3 Diet Cokes, 1 bag of microwave popcorn to this day, and just eat away. You go to a pizza buffet, man, one of those vegetarian pizzas going in that purse. Never let anything go to waste. I'm like, Ma, when I'm at home for Christmas, I'm like, Ma, you're 65 years old now. Age is just a number. This is a very good pizza, okay? And at the $12 for buffet, I only had 2 slices. The $6 a slice, that is not enough. Right? She wants to get those things down to like $1 per slice. She want to get down to $1 per slice. But this Carnival, we got to short this just for all my people who come to this country searching for a dream, and then they end up in a Carnival Cruise Line. We're shorting this thing. I always wanted to be on one of them nice ones. Yo, FB's out here. Man, Facebook is missed on earnings too. It looks like they're soaring costs, slow down. Ooh, man, that sounds nasty. That sounds nasty, don't it? Yo, you can roll with Facebook here. Facebook trades very, very thick, though. Very, very thick. Yeah, it's so thick. So what's the float on this? 2 billion. Yeah, man, it may spike. If it busts under 205 and ORB's right at the open on that, I think you're fine. Yeah, I think you're fine if it busts under there, but you got to just be careful because it trades a little bit thick. What I mean by thick is like when the float gets to like 1-2 billion shares, it's almost all like algos. Yeah, man, it's so thick. Shoot. I'm going to keep it on the watch list, but I have a hard time believing I'll trade it because I've traded this thing in the past. Man, these thick stocks, they just grind. They do so much volume. They're so thick. The float's so big. We could keep it on, but, It's not ideal for us. It's better to kind of trade something that's a little bit more unknown. Cuck. Now, cuck. That's just an awesome word in general. I may just put this on the list just so we can say cuck all day. Cuck. I'm shorting this cuck. I'm longing this cuck. That sounds amazing. We might just add that to the list just for the name of it. You know, it's kind of like when Dick's Sporting Goods has earnings out. We always put it on the list, and we're like, I'm longing Dick's. I'm shorting Dick's. And we never even want to, but we have to. Add cut to the list just so we can just say it over and over and have some fun. Junk, 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 junk. Dun, 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 junk, 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 junk. All right, cool. So those are the earnings plays for today. Let's talk about the non-earnings plays. There's a couple things that we have to be aware of today. Number one, we have a gap down today due to more extended fears of the coronavirus. That's just the nature of the game right now. Viruses don't just go away. If anybody remembers the SARS and the MERS and the foot and mouth and the cock and balls epidemics, they don't just like rebound in a day. They go away, then they creep back for a couple days. The news cycle changes, and then they go away, then they creep back. So there's like a little bit of an ebb and flow. It's never like, okay, the market just tanks, and then everybody says, hey guys, the virus is gone. We're all good to go, and then the market ramps back. There's a little bit of a rumor mill as news is flowing. So, and of course, we're so far away from China. Obviously, we're trading on opposite hours. So you're going to get a little bit of this back and forth. The action in the market has been constructive the last couple of days. It did not match. The bounce did not match the ferocity, though. The ferocity of the move down. So that's something that we have to be aware of. Second part that we have to be aware of today is, when the Fed came on yesterday, it sounded like, I don't know, it sounded like the market reacted slightly off kilter to, what they were saying. If you see here, like we were ramping really nicely. And then when the Fed came out, the market kind of pulled back hard. So it looks like what the market did not like, what they said. I did not read the statement on it as I just can't read. No, I'm just kidding. I didn't read the statement. I was just looking at the reaction. But my guess is like looking from the reaction, they probably came out and said they were going to probably taper some of their purchases of the money that they've been pumping in. So the Fed's been pumping in tons of money, tons of liquidity all over the place. It looks like probably they said we're going to start tapering this thing off at some point. And if that happens, if the Fed takes away the cocaine, this market's pulling back. This whole run, guys, it had nothing to do with tax cuts and Trump this, Trump that. The whole run is, a liquidity measure. When the Fed starts pumping, the market starts going, right? So the Fed starts pumping, the market starts going. You never fight the Fed. That's like, that has always been the case. Don't be short-circuiting that thing. My thing is broken there. Okay. Use some of these other plugs, man.
I got you.
Don't be short-circuiting nothing over here. You got a lot of plugs over there. We need to get one of these little chargers again. I keep leaving it over there for Miss Wanda to throw it away, and she just leaves it there. It's messed up. What's going on? Sorry about that. I got a couple students over here. By the way, boot camp students, anybody in the hood, you always got room over here. And Alex, I look forward to seeing you in March. I'm gonna put you in. I got a nice room. We call it the princess room where my nieces stay. I'll put you in there. I'm just kidding. PayPal on the dip? Probably not. This doesn't. It had earnings out, so you don't have any edge on it now. I would have rather if PayPal had opened up strong and broke over 120. I'd rather long it like that because you're gonna have the momentum. This dip, it could go either way. Maybe it drifts back, maybe it falls back. We don't have necessarily an edge on that. So leave that one alone for now. Good. Man, we got almost too many gappers. So let's rate these. Like, we want to always make sure. So obviously, we got to watch this Tesla. I think QRVO is nice. Now is a little bit pricey. LXRX. And we got these IPOs. This Telesco. I like shorting a little bit more than long. And these earnings plays. What's this MER? Yeah, MER looks okay. Yeah, I'd leave all this stuff alone. Oh, yeah, man. We always have summer boot camp over here at the house. Sometimes we pack them in like 10 deep. The only rule is you got to stay here. All right. Let's see where the market's opening. Let's go shred this thing. So we still got the week open. Watch this TVIX. If the market gets wild today, you can roll with the TVIX. When the market goes down, this one goes up, and it goes up a lot. So market goes down, say 1-2%, this thing could move 5 to 10%. It moves in relation to the market. It's a volatility instrument. It does get wild. Do not trade it with big size. If the market starts to tankola, we can shred this one. Watch all these Chinese names. Man, this one could bounce at the 50 SMA, but man, this could have just be a bear flag right here. We very well could just start to shred on these things. Man, this is going to be a little bit... Things are going to be a little bit tricky today. Yes, they are. Oh, boy. All right. Well, we know what we got to do. Tesla. Tesla. All right, let's get to work, guys, as always. Let's manage our risk. I think we're going to have a little bit more volatility than we had yesterday, which is awesome. And, of course, let me know if you need anything before this market opens. God bless. I'll be in the Bulls on Wall Street chat room. Well, if I make a bunch of money, I'll be in there till noon. If we're grinding our balls off, then I'll probably be there a little bit longer. As always, you guys are more than welcome to come into the Discord room. We got an awesome chat room, having a little fun. There's a good group of people in there. Shredded. All right. Cool, 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 cool. Of course, Mr. Mike. If I could turn back time, if I could find a way. One thing to do during earnings season, guys. One thing to do during earnings season. Run your top liquid gainer scans, top loser scans, about 15 minutes into the market. So there's going to be plays that you just miss, like that are on your gap scans and your earnings scans. There'll be plays that you missed. About 15 minutes into the market, run your liquid gainer scan. See what else is popping up. You'll start to see some random names that had like earnings out that maybe just didn't show up on our scans because, you know, I have like volume parameters and price parameters and different things on there. It may have not showed up because it snuck by one of the parameters, but then they end up going a little bit later. So always be mindful of those things. We'll get it going. Appreciate it, Greg. Later, Alex. All right, let's go do what we do.